Hello and welcome to this video lecture on the history of stock exchanges. Today, we will be exploring how stock exchanges have evolved over time, from their early beginnings in coffee houses to the high-tech trading floors of today. The origins of stock exchanges can be traced back to the 16th century, when merchants and traders in Antwerp, Belgium began meeting regularly to trade goods and securities. These meetings were held in a building called the Bourse, which later became the name for stock exchanges in many European cities. However, it wasn't until the 17th century that the first true stock exchange was established in Amsterdam, Netherlands. The Amsterdam Stock Exchange, or Beurs van Amsterdam, was founded in 1602 by the Dutch East India Company, which needed to raise capital to fund its expeditions to Asia. The exchange allowed investors to buy and sell shares of the company's stock, which became highly sought after due to the company's profitability and the potential for lucrative returns. The success of the Amsterdam Stock Exchange inspired other European cities to establish their own exchanges. By the 18th century, stock exchanges had been established in London, Paris, and other major financial centers. In the early days of stock trading, transactions were conducted in a very different way than they are today. Instead of electronic trading platforms, investors would physically gather in designated areas, such as coffee houses or trading floors, to buy and sell shares. In London, for example, traders would gather in coffee houses such as Jonathan's Coffee House or Garraway's Coffee House to exchange information and trade stocks. These coffee houses were the social hubs of the financial world, where traders could share rumors, news, and gossip about the latest developments in the markets. The trading process itself was also quite different from what we are familiar with today. Instead of placing orders online, investors would shout out their buy and sell orders to brokers on the trading floor. The brokers would then relay the orders to traders, who would negotiate prices and execute trades by hand. As the financial markets grew more complex and the volume of trades increased, the need for a more organized and efficient trading system became apparent. This led to the development of new technologies and trading practices that would transform the way stock exchanges operated. One of the most significant developments was the introduction of telegraphy in the mid-19th century. The telegraph allowed traders to transmit information quickly and efficiently over long distances, enabling them to react more quickly to market developments and execute trades more efficiently. Another important development was the establishment of clearinghouses in the late 19th century. Clearinghouses acted as intermediaries between buyers and sellers, ensuring that trades were settled in a timely and efficient manner. This helped to reduce the risk of default and increase the overall stability of the financial system. In the early 20th century, the emergence of the automobile and other forms of transportation made it easier for traders to move around and conduct business. This led to the development of regional stock exchanges, such as the Chicago Stock Exchange and the Pacific Stock Exchange, which served specific geographic areas and specialized in certain types of securities. The biggest transformation in the history of stock exchanges came with the advent of digital technology. In the 1970s and 1980s, computerized trading systems began to replace the traditional manual trading practices that had dominated for centuries. The first computerized trading system was the NASDAQ, which was launched in 1971 by the National Association of Securities Dealers, NASD. The NASDAQ was the world's first electronic stock market, and it revolutionized the way stocks were traded by introducing a new level of speed, efficiency, and transparency. The NASDAQ was followed by other electronic trading platforms, such as the New York Stock Exchange's NYSE electronic trading system, which was launched in 1998. These electronic trading platforms allowed for faster order execution, lower transaction costs, and greater access to liquidity. In addition to electronic trading, the digital revolution also brought about new ways of analyzing and understanding the markets. Advances in computing power and data analytics have enabled traders and investors to process vast amounts of market data and identify trends and patterns that were previously impossible to detect. Despite the growing dominance of electronic trading, physical trading floors continue to play an important role in the financial markets. However, these trading floors have evolved significantly over the years, incorporating advanced technologies and modern design elements to create high-tech trading environments. One example of a high-tech trading floor is the NYSE's trading floor, which underwent a major renovation in 2018. The updated trading floor features state-of-the-art technology, including a 21-foot video display screen, advanced data visualization tools, and a high-speed wireless network. Other trading floors around the world have also adopted advanced technologies, such as artificial intelligence and machine learning, to help traders make more informed decisions and react more quickly to market developments. As we look to the future of stock exchanges, there are both challenges and opportunities to consider. One of the biggest challenges facing the financial industry is the increasing complexity of global markets, which can make it difficult for traders to navigate and understand. To address this challenge, exchanges are investing in new technologies such as blockchain and distributed ledger technology to help simplify and streamline the trading process. These technologies have the potential to reduce transaction costs, increase security, and provide greater transparency in the markets. Another opportunity for stock exchanges is the growth of emerging markets, particularly in Asia and Africa. As these regions continue to develop and modernize their economies, there is increasing demand for access to global capital markets. This presents an opportunity for exchanges to expand their reach and offer new investment opportunities to a growing number of investors. In conclusion, the history of stock exchanges is a story of evolution and innovation. From the coffeehouses of the 17th century to the high-tech trading floors of today, stock exchanges have continuously adapted to meet the changing needs of investors and the financial industry. As we look to the future, there are many exciting opportunities and challenges ahead, and it will be interesting to see how stock exchanges continue to evolve and shape the global economy. Thank you for watching this video lecture on the history of stock exchanges. If you're interested in learning more about the history of stock exchanges, there are many great resources available. Books such as A History of the Global Stock Market, From Ancient Rome to Silicon Valley by B. Mark Smith and the Stock Market, A History by Mark St. Cyr provide a comprehensive overview of the development of stock exchanges around the world. In addition, there are many documentaries and films that explore the history of finance and the stock market. Some popular titles include The Ascent of Money by Niall Ferguson and Inside Job by Charles Ferguson. Finally, for those interested in getting involved in the stock market themselves, there are many resources available for beginners. Online brokers such as Robinhood and EVTRADE offer easy-to-use platforms for buying and selling stocks, while educational websites like Investopedia provide valuable information on investing strategies and market trends. As the financial industry continues to evolve, it is important for investors to stay informed and educated about the markets. By understanding the history of stock exchanges and the forces that have shaped them over time, investors can make more informed decisions and navigate the complex world of finance with greater confidence.